Is this the Delta Dawn or the new coronavirus correction for the stock market? Has BHP really gone green, dumping its assets into its oil assets, that is, into Woodside? And CSL has reported. Is it good news for shareholders? I'm Peter Switzer, he's Paul Rickard, and we're mad about money. All right, Paul. The market is starting to sell off. We've been a little bit nervous that this market was doing so strongly, ignoring the coronavirus Delta strain infections right around the world. Is the market starting to take more respect of these worrying infections?
Good morning, Peter. Yeah, look, I think the market is finally starting to just have a little bit of respect for the virus. I think what was telling last night, Peter, was the movement higher in the US dollar, weaker commodity prices, which sort of go together, telling you perhaps the market just thinks that maybe the growth isn't going to be quite be there. The virus might have a bigger impact than we all think. And maybe just as we get out of the summer season in the US and into the scary months of September and October, we might just see a little bit more coming into it. So I'm just, personally, I'm a little bit cautious. Look, we can read it the other way, and both last two nights in the US, it's tried to sell off and it really hasn't. Last night, it bounced off its lows and came back upside towards the end. So you can see positives in both nights, but my guess is there's just a little bit more nervousness around than there was a week ago.
And people forget that the stock market is the intermixing of buyers and sellers. And at the moment, the buyers have been in the ascendancy, not as worried about coronavirus, not worried about the slowdown, potential slowdown of the economy. But now they're starting to probably get a little bit nervous, and therefore some buyers become sellers, taking their profits, sitting on the sideline and whatever. And so it's just going to be that battle point. I think it's going to need some big turning point type news that shocks everybody to make this a big sell-off. At the moment, I think it'll be a measured one, working out the companies that aren't going to do as well as we would have thought, thinking that, okay, they won't do well into 2022 until the middle of the year, therefore we will sell them. All those sorts of things I think will be playing on the minds of the stock market. But as long as the vaccination rates keep rising right around the world, I think that will prevent a massive sell-off.
Yeah, I mean, I think that the thing that could cause a sell-off, Peter, is if we start to lose confidence in the efficacy of the vaccines, right?
Yeah.
I think that's probably the big risk. But at the moment, all the data says that they're really strong, so we don't have to worry there. And what the bears know as well is, of course, that the central banks and governments are just going to keep on supporting things. So interest rates aren't going anywhere, and of course, in that environment, it's very hard for equities to go down when there's so much money around. So I guess that's the bear point for me. But maybe just had such a big run, you've got to think there's a lot of profits out there, and maybe just time to be just a little bit more on the sidelines.
Yeah, and in America, August is a bad month for the stock markets historically, and you've got October and September, there have been sell-off and crash months. There's reason for nervousness, but once you get it out of October, it's good to be long stock. So unless something really scary comes along, I'm going to see any sell-off as a buying opportunity. Let's go to the next one. BHP. Has it really gone green, Paul?
Well, they're all trying to go green, Peter, and I think this is one of the huge themes of our market is the ESG concerns. We've seen it in the oil and gas sector. Despite higher oil prices, share prices of companies like Woodside and Santos have been smacked. We've seen it with companies like AGL. Anything that's involved in hydrocarbons has been punished. BHP is as announced late yesterday, Peter, is divesting all its oil assets, the whole fleet of oil, so not hanging on to anything. That's not just bass rate oil, that's all their hydrocarbons in the Gulf of Mexico, putting it into Woodside and then giving its shareholders shares in Woodside. So effectively BHP, by the end of the financial year, that's the year ending 30th of June next year, will be totally out of oil and energy. And BHP shareholders will own shares in Woodside and then be free to choose what they want to do with it. So I guess it's part of this thing, and it's part of BHP saying, we're going to go green, guys, and we're not going to be in that producing hydrocarbons anymore.
Okay, but the question I get a lot of people have, well, if you take those income and profit-making assets out of BHP and whack them into Woodside, does BHP become less profitable and therefore its share price should fall?
Well, it's interesting, Peter. It's actually a pretty small part of the profit. If you actually look at last year's numbers, this is the end of June. Iron ore was responsible for 70% of BHP's EBITDA. Copper was responsible for 23%, so that's 93% out of the 100. It's those two ores. Oil was something responsible like about 3%. So look, it's not a big deal at the moment. BHP sees itself, its future, obviously, in commodities of the future. It describes things like nickel as being a commodity of the future and investing heavily in nickel. We saw the announcement with the Jansen Potash. It's had that project on its books now for, I think it's the best part of almost 2 decades, Peter, since it bought that originally. It's now going to spend $5.7 billion in getting Jansen phase 1 ready for production sometime in about 2027. So that's potash, which is used as fertilizer.
Yeah.
So I guess that's where BHP is investing. Its vulnerability, of course, BHP is the iron ore price, Peter, because when 70% of the margin is coming out of iron ore, it's still very vulnerable, that commodity. But oil's not big, and so that's why I think it's able to say, hey, we're going green here, guys, and get on board with us.
And the diversification getting into, like, effectively a supply to the food industry with potash, it's a good diversification thing for BHP down the track, isn't it, Paul?
Look, it is. I mean, it's not a particularly impressive return on their estimates. They're only estimating a return of between 12 and 14% on return on invested capital. That sounds a lot, but of course, we know with projects, Peter, they rarely run to budget, and so they do tend to have, particularly projects that go wrong, can be very expensive. So it's high risk. Potash has been in oversupply. So BHP is assuming that the oversupply will end about the time Jansen comes online in 2027. That's probably a big call. And the reason that they've held this asset for so long and haven't done anything with it is because they haven't been convinced about the commodity's future. So it's a big call by the BHP board, but only time will tell whether this was the right or wrong call.
Okay, finally, CSL has reported this morning. Is it going to be good news for shareholders, Paul?
It's not as good as news as it looked at the outset, Peter, because it's a beat, all right? Absolutely a beat in terms of where they've delivered. So CSL is one of these companies that does guide to the market. It doesn't say much in between. It guided the market to profit on a constant currency basis of between 2,170 and 2,265 million dollars. It's beat that, come up with an outcome of 2,307. So that's a big beat in terms of how it had guided. It's an increase of 10% of profit on a constant currency basis, 13% without that. And so despite all the negativity around, problems with plasma collection and the rest of it, it's done really well. Also, a bigger dividend, about $1.61 in Australian dollars terms for Australian shareholders, and a small bit of franking for the first time. It's going to be 10% franked. So there's some positive there. Where it's not a beat, Peter, is its forecast for next year. It's warning about margin pressure, and it's forecast on constant currency terms a range of 2,150 to 2,250. So mid-range 2,200. That compares with 2,307 this year. So that's down. Most of the analysts sort of had that in their numbers. It'll just be keen to see how they interpret that, because what CSL is saying, we had a great year in influenza last year because of we had a great year in our Seqirus business because of a huge boom in influenza vaccines for the Northern Hemisphere winter. That was a bit of a one-off. And it's talking about margin pressure in terms of some of the plasma. So that's why it's talking about, despite revenue growth, it's margin pressure driving profit down a little bit. Just interesting to see whether the analysts had that in their numbers. My guess, Peter, if I had to say Nostradamus, it might just start off a little bit weaker, but maybe as the analysts digest the talk about the margin pressure, digest CSL saying they see 2022 as transformational, it won't go too far south.
Okay, and the interesting thing is that these guys have a history of, in a sense, under-promising and over-delivering, which they've done this time.
Yep, yet again, we haven't seen an under-promise, right? So every promise, they either at the high end or beat it. So again, despite all the negativity about CSL coming into this, they've convincingly beaten their own guidance and beaten what the market said. So the question mark is about next year. Let's see whether that's really understood by the market. So that'll be the watch point for. It might take about 48 hours for the CSL numbers to play through the market. Just exactly what the institutional investors think about it.
Okay, well, he's Paul Rickard. I'm Peter Switzer, and we're mad about money.